It is Thursday once again. Let's take a look at some legacy charts, comparing this to crypto through a crypto lens. I mainly pay attention to legacy because of the correlations. I personally do trade legacy stuff a little bit, but not too much. Majority of my trading is in crypto stuff. So I got weekly BTC here, daily BTC on the right. Some things I really pay attention to are the volatility index, the VIX, VIX, fear index as it's otherwise known. If the VIX is up, usually everything is down. If the VIX is down, usually everything is safe to go up, is how I think about it. We have the DXY, which is the US dollar index. This is a 30-week rolling correlation, extremely negative over the past few weeks. This correlation has been declining slightly in that it's getting less negative. 30-week rolling gold correlation, the blue one here, XAU USD. That correlation was the strongest it's ever been up until a few months ago. Now the loosening correlations are great if price is going up because gold stopped going up. So it's good that we're breaking that correlation. Obviously, if you're bullish on BTC, if you're bullish crypto in general, you want BTC to be completely devoid of any correlation for anything, which in general over time, if we look at like the daily correlations, 30-day rolling for like SPX here, the S&P, NASDAQ on the bottom in the blue, in general, they are uncorrelated. They don't stay correlated for very long. We've actually had really high periods of positive correlation for both the SPX and the NDX this year, kind of abnormally so, in that it's been an everything bubble. Everything's just sort of took off, inflation, money printing, QE, whatever reason. Dollar weakness is expected as we get more stimulus in the US and globally, whether or not we see a stimulus before January, February is anybody's guess because every other day it's a different story. They say they're ready for a stimulus. They say they're not ready. They say they're close. They say they're not close. It reminds me of the China trading agreements that were Schrodinger's China trading agreements. They were both dead and alive simultaneously every day. So in general, I want VIX declining, which it's still historically extremely high. A VIX below 20 should be incredibly bullish for BTC and ETH for that matter. SPX and NDX should continue their historic bull runs because of money printing, because of QE, as well as gold. Gold should continue to hit all-time highs, which only makes sense if we're printing more money. So that's just baseline where my head's at with those correlations. If you look at these all individually, this is gold. Gold actually looks like the trend has completely reset. And you can see since 2019 on the daily, I mean, it was sideways going into 2019, and then it reset once, twice, 3 times, 4 times. This will be the 5th reset since 2019 as far as potential bullish continuation. So if gold gets back above the cloud once again, which it may do that into January, February, once a stimulus becomes more clear as far as legislation goes in the US, it's very likely that this breaks up once again. We get a situation similar to late 2018, where the cloud will just go fully red, the trend will fully reset to bearish, and then it'll come bullish again. We'll get new yearly pivots in January. May even test 1761. I think that's the weekly Kijun or something, that horizontal I have here. So all this will be fine, and I think the macro multi-year trend is still intact. But as far as a tradable day-to-day trend, I think that's going to reset fairly soon. So to see the correlation declining between gold and BTC is good because gold looks more bearish than BTC definitely here. If you look at the daily S&P, it still looks like a W at the top, a double bottom. W for win, as the kids say, or an ugly cup and handle chart pattern. Here's the cup, here's the weird handle. So if this can break this top at 3,600 with conviction, it certainly looks good. I think it's just in a holding pattern until the president's stuff is cleared up, until the stimulus stuff is cleared up. Any clarity on any of that, any clarity on COVID vaccine as far as exact dates when it'll be rolled out, who's going to get it first, that sort of thing. Because right now in the US, the COVID numbers are looking real bad all across the country, mainly in the Midwest. If you look at NASDAQ, NASDAQ has outperformed the S&P strongly. We're seeing some rotation from S&P, from NASDAQ to S&P, but overall NASDAQ is still holding at highs here. So overall S&P and NASDAQ both still look bullish on trend on the cloud, just face value, it's above the cloud. TK line's bullish. The lagging span is likely within price here, as is the case with S&P. So anytime that setup occurs for the cloud, I typically wait till everything is bullish again, just to be clear, because obviously it's ranging, and it may just keep ranging here for the next 2 months until the stimulus is clear and obvious when it's coming, if it's coming, which it should be, I think. So I don't think either of these are at any risk of massive bearish rollover as we stand here today. Now, if we get more lockdowns in the US or if more COVID numbers get worse and worse, that may change incredibly rapidly as it did in March. I think most of that shock is over, but the reality when that sets in may spook a lot of these elevated prices. If you look at the Dixie is also kind of in a holding pattern, DXY. It trend-wise looks like bearish continuation. It had a potential inverted head and shoulders, got denied at the Kijun in the cloud, reconsolidated, tested another edge-to-edge sort of bullish reversal that got denied, and the TK recross below the cloud happened. So in a vacuum, when I see this, I'm very convinced that this is usually bearish continuation. The clean short for this, if you were trading this, would be anything below 92. You can see there's a nice horizontal there between the lows. So if this gets any momentum below 92, it should be incredibly bullish for BTC. So if one happens before the other, that's an easy trade setup because you can set alerts for the DXY at 92 or 92.01 or something. And when we get close to that, if you're not positioned in a BTC trade, or if you're short, you might want to think about closing your short, stuff like that. You can use these charts to help influence your crypto trading decisions. Then lastly, looking at USD CNY, it continues to strengthen. The CNY continues to strengthen. So it's kind of in a 2017 momentum swing. Now this is set by the PBOC for the most part. So this isn't exactly an organic tradable product, but the market was going mad at anything above 7 and then it just kind of stayed there for a long time. And now it's back below 7. So typically we were seeing in like 15, 16, we were seeing the narrative about capital flight out of China because the yuan was weakening, the dollar was strengthening. Now we have the yuan strengthening and weakening against the dollar weakening against the yuan. So I think that narrative is less savvy now than it was before. But I also just saw an article about China potentially banning any digital currency that isn't its own digital currency in the near future. So there's all sorts of potential China fear, uncertainty, and doubt related stuff in the future. So it's hard to say how much of China is dominant in crypto trading. I think China's big in the mining realm, potentially less so in the trading realm, but I guess we'll see. So overall, everything still looks bullish. Legacy looks like it's been in a holding pattern. The correlations from crypto to legacy are falling off, which is good if you're bullish BTC, because they're not acting together as much anymore. So if that correlation continues to decline, if those correlations continue to decline and VIX falls below 20, I mean, we're talking easy all-time highs for BTC. I'm saying it right here, right now, for the 25 people who watch this, easy all-time highs if VIX is below 20.